Hey, this is Tad, a mortgage agent in Toronto, and this is a pre-approval budget video. This is an example of the budgets that I do for my clients based on their situation. So here's the scenario for this video. First off, our borrowers have been pre-approved for a max purchase price of $700,000. Their total budget, which include the down payment and closing costs, is $80,000. They're looking to buy a condo in Toronto. They're first-time homebuyers, and they're looking to get a 5-year fixed, insured, or high-ratio mortgage. So now we know the scenario. Now we're going to talk about the four options. We have two of them at the $700,000 max, one at $675,000 and one at $650,000. These two lower amounts are just to show the borrower what their costs might be if they chose to buy something at a lower price. So now we're going to start at the top here with the amortization, and we're going to work our way down, and I'm going to explain each point as we go. First off is the amortization. So this is the total amount of time the borrowers have to repay this loan. In this case, because they're getting a high ratio mortgage, that maximum amount is 25 years. All right, so now we're going to talk about the annual mortgage rate. So this is going to be the interest rate that we're using for the sake of this pre-approval budget. It's something in the middle of the 5-year fixed insured rates that we have in the broker channel at the moment. There are some that are lower, there are some that are higher. It depends on the lender and the client situation. So we're going to stick with this nice clean 5%. Next, we're going to talk about the first-time homebuyer status. So in this scenario, both borrowers are first-time homebuyers. This means they should be able to save on their land transfer tax as part of the closing costs, which I'll explain at a later time. Next, we're going to talk about the property taxes. So I looked up condos in the $700,000 range in Toronto and found a wider range of annual property taxes. I saw some as low as $1,400 and some as high as $3,000. In this case, for the sake of the video, I'm going to go with a nice $2,500. Now we're going to talk about the property location. As we know, the buyers are looking to buy in Toronto. This means they will have to pay a double land transfer tax. One for Ontario, as for all buyers buying in the province, and a second, which is specific to buying in Toronto. Now we're going to move on to the mortgage breakdown. So we have our purchase prices here of $700, $700, $675, and $650, like we outlined earlier. Now we're going to talk about the down payment. So in column 1, we have our minimum down payment of $45,000. Next, we have a slightly higher at $61,000, and then we have $63,000 and $64,000. Now, the reason that these down payments are so much higher is because I'm trying to use as much of the borrower's budget for the costs in these three columns here. So $61,000 is their max down payment while still staying within the borrower's budget. And it's the same situation for these two, as you can see. We are just under their total budget of $80,000. Now we're going to talk about this mortgage insurance premium. What is it? Well, when you get a high ratio mortgage, the lender has to purchase mortgage loan insurance. The cost of this insurance is called the premium, and the amount will vary depending on the size of the down payment. The lower the down payment, the higher the premium will be. In this case, as you can see, with the lowest down payment here in the first column, the borrowers are going to be paying the highest premium cost out of these four options here. There's one more point about the premium. You have two options to pay it off. Option 1, you can pay it off in a lump sum before the closing period. And option 2, which is the most common, is that the premium gets added to the loan amount, which increases your total mortgage. In these four options, we are adding the premium to the loan amount, increasing the total mortgage. Now we're going to talk about the closing costs. So first up, we have the down payments as we have up here. We have an estimate of the lawyer fees, which will vary depending on who you use. We have a tax on those lawyer fees. We have an estimate of an appraisal, which will vary depending on whether the lender wants an appraisal done and which appraisers that they want used. Next is the land transfer tax. So, like I mentioned earlier, because they're buying in Toronto, the borrowers will have to pay a double land transfer tax. However, because they're first-time homebuyers, they should be able to qualify for the maximum rebate amount from both the city and the province. And here's what their cost may be with both rebates already applied. Now we're going to talk about the tax on the mortgage insurance premium. So, whether the borrowers pay the premium off in the lump sum or they add it to the loan amount, they still have to pay the tax on it at closing. And last is this buffer of $1,000, just in case some costs are higher than expected, and we reduce the chance that the buyers have to run around looking for extra money at the last minute. And now we get to the closing cost, which, as you can see, stays within the borrower's budget of $80,000. Now we're going to get to the household budget breakdown, which includes, in this case, the mortgage payment, the condo fees, and the property taxes. First, we're going to talk about the monthly mortgage payment. And the cost is going to be based on the 5% interest rate, 25-year amortization, 5-year term, and these mortgage amounts. And next, we're going to talk about the condo fees. So just like the property taxes, this is just an estimate. I looked at condos in the range of $700,000 and saw a wide array of different condo fees, some lower, some higher than this $650 amount. So I went with a nice clean $650 for the sake of this video. And last, we have our monthly property taxes, which is just this annual $2,500 divided by 12. Now, adding each of these costs up, we have the total home expenses that the borrowers can expect to pay in the scenario of $4,820, $4,723, $4,560, and $4,402. So that's it for this specific budget. Now, once the borrowers have received this budget video and the other pre-approval information, they can go out searching for homes in their price range. Any properties that they take interest in, they'll send me the MLS details and I can create specific custom budgets related to each property. And this is so the borrowers can do a comparison and see what their costs might be if they choose to buy one of these properties. All right, so that's it for the video. Thank you for watching. And if you have any questions, please let me know. Take care.